All right, we got to talk Bitcoin tonight. It has been on an absolute moonshot following the election, but I do think there are some concerns that lie ahead. That's what we will discuss tonight. Before we get into the details, make sure you get subscribed, turn that notification bell on as well. And then if you find this video particularly helpful, give it a thumbs up on the way out. All right. Awesome rally that we've seen. Look, like stocks got a huge rally right after the election, but they've fizzled, given most of that back. Bitcoin holding on to most of that as it quickly approaches that milestone level of $100,000. We'll probably get there. We'll see. But despite the euphoria that we've seen, and again, look, the Trump administration has come in. They're putting a lot of people in place that are very pro-Bitcoin. He's saying he's the first Bitcoin president. That's great. But really, what's going to be most important is what drives any asset, and that's going to be the flows. We will look at some data in just a second to substantiate that. But what I'm concerned about is less the fact that he's going to, or the Trump administration is going to put in policymakers that are going to be pro-Bitcoin and get hurdles out of the way for Bitcoin adoption. What I'm looking at is the underlying driver of price. And what I'm seeing right now from the Trump administration is concerning. Maybe not immediately, but certainly down the line. I think we could be setting ourselves up for some pain kind of if this rally continues forward from here. So yeah, let's just get into the details. A couple days ago on Twitter, I posted this chart right here. And look, if you're new here and you're not exactly familiar with everything we do, the premise of my entire macroeconomic thesis is that when the government spends, that adds financial assets to the private sector, okay? Forget any policy implication, forget any political leaning you might have. Look, from a macro perspective, government spending adds financial assets, and that's to the private sector, and that's why when the government spends, you see a very strong correlation between that government spending and asset prices. Again, forget about any policy implications, any kind of Main Street macro implications when it comes to determining asset prices. The number one factor for determining asset prices, and this includes Bitcoin, is underlying flows. Following COVID, as you can see on the screen, we saw a massive increase in deficit spending, shooting higher in red. Black is the year-over-year return of Bitcoin. It, of course, followed up like all assets. And then in 2022, we saw a massive reversal of flows of deficit spending going negative, so effectively in surplus for a brief period of time in early 2022. That brought a slowdown to the entire global economy and assets reversing at that point. But by the end of 2022, as we headed into 2023, and as the Fed was increasing interest rates, adding that additional interest income to the private sector, we saw all assets start to take off again, and that was no different for Bitcoin. So Bitcoin, like any other asset, gets its price derived primarily from flows. And this is the concern that I have. What I'm seeing right now coming out of the Trump administration with the creation of the Department of Government Efficiency is a lack of understanding, at least from Vivek Ramaswamy and Elon Musk, of how the macroeconomy actually functions and what government spending is. Every single day, we see Vivek parroting what Malala has done in Argentina, or Elon Musk just completely showing his ignorance of what the national debt is and a desire to go ahead and reduce deficit spending. If we reduce deficit spending, we reduce that additional interest, or I'm sorry, those additional financial assets into the private sector that boost asset prices. And this is my main concern here. Now, we could have some offsetting policies. Obviously, day one, Trump wants to get tax cuts in. Those are going to help. Those might offset some of the spending cuts. But it seems clearer and clearer that President Trump is going to go along with what Vivek and Elon want to do in terms of doing massive spending cuts. Now, look, I'm all for cutting kind of bureaucratic waste. But again, put policy aside. If the cutting of the bureaucratic waste ends up causing spending to dive tremendously, say like it did in 2022, we're going to get ourselves in a situation just like we found ourselves in, where asset prices have to reverse course at that point in time. And so that is what I'm going to be tracking as we head into this Trump administration. Now, here's the key difference between where we were at in 2022 and where we are at today. We could still see those spending cuts. And we saw this, say, in the late 90s as well, when we were running quarter after quarter surpluses, where the private sector could endogenously create its own money. So we could end up seeing private debt push higher. And I brought private debt. You can get this data from the BIS up and the rate of change of private debt to take a look at the big private debt bubble we had in 2000, then in 2008 before the crash. And you'll see that Bitcoin, one, correlates closely, maybe not quite as close as with fiscal spending as it does with the credit cycle, but there is a moderate correlation there. But we could see, and we're already starting to see the early signs of the next credit cycle take off. So even if we do see fiscal spending take a major hit, it might take a year or two, again, like it did in the late 90s, for the bubble to kind of play out. And then maybe down the line, a couple years, eventually we see that bubble pop. So I think that is a distinct possibility if the spending cuts go through and we get things like tax cuts and other policies that kind of help juice the private sector, juice lending, and juice the endogenous side of money creation to offset the lack of spending that's going to probably hit if we end up getting the spending cuts that Vivek and Elon want in. So, look, what I am arguing here is pay very, very close attention to where fiscal spending is happening. All assets follow very closely with fiscal spending. It's no coincidence that the S&P, I'm overlaying the S&P here with Bitcoin, that the S&P correlates very strongly with Bitcoin. Just 5 times less move for move, but Bitcoin is effectively a 5x sort of ETF. It's no coincidence that these things move in lockstep with one another because the price is derived and driven by the exact same underlying flow, and that's going to be that fiscal flow. So keep an eye on the fiscal flow, and that is going to be the most important thing to watch. Now, if you're looking for a place to track those and you're an active trader and an active investor, head on over to appliedmmt.com. Weekly updates and a plethora of tools and data series that we've created over the years that can track every aspect of the underlying flows that you need to keep an eye on that are going to be the most correlative inputs into price. We have it all over there. Again, appliedmmt.com. Also, if you're an institution and you're looking for a custom bespoke build, some of the technology we've been showing, make sure you click for institution right here, give us your contact information, or jump over to our website as well for institutions, modernmacrotechnologies.com, and sign up over there. Anyway, that's what we have for tonight. So good trading, everyone, and we'll talk to you next time. Bye-bye.